Hello smart money traders, you're welcome back here. In this video we're going to do a top-down analysis on the dollar to determine the weekly directional bias of the dollar. This is typically what I do every week to be able to set myself for trading for that particular week. I don't take trade every day, but I do this to determine what is the directional bias of the dollar. And if you're trading any dollar paired currency or asset that has to do with the dollar, then you need to learn how to do this every week. I'm going to show you what I do every week before I get into trade. So what we use for this particular analysis is DXY. It's basically dollar index. It is an indices that determines the strength of the United States dollar, and then that will be able to give us a hedge on what exactly the dollar may be doing for that particular week. This is very important. Now, the first thing I do once I come here is to head over to forexfactory.com. This is for me to be able to stay ahead of the game, to know exactly what are the economic news that will be released for that particular week. Forexfactory.com is the tool you're going to be using. Once you come here, you're going to head over to where you see calendar, and then you're going to get all the economic calendar. There are different platforms that give you access to that, but I use forexfactory.com. Now I come to filter, and then I want to pay attention to only high impact news. You can see I have this high impact and then medium impact. These two are not relevant to me, so I untick them. So it is only United States dollar that I will pay attention to. So from Wednesday, I have high impact news, CPI month by month, CPI year by year. You can see all these high impact, the ones with red. Only the United States dollar we have Wednesday, Thursday through Friday. We have high impact news. That's basically to say that we're going to have a high volatility week. And then it is not every day you're going to be trading, guys. You have to learn to stay away from the market some of these days when you can't see anything. And that is part of the discipline of trading. Now, coming back here, let's get into the top-down analysis. What I basically do every week is to check out what is the directional bias of the dollar. Once I've done that, I can go to any pair of my choice to look at it as far as it is pegged with the United States dollar. You can see I have GBPUSD, Euro USD, and CAD JPY. These are the pairs I basically trade most of the time, and CAD JPY is not part of it, but I just decided to put it right there. Now let's get into that. You're going to start from the monthly time frame down to the lowest time frame. What we see right here, if we scroll down, I've shown you this time and again, price have traded into what we call a mitigation block at this point. Can you see this mitigation block? Price actually traded into this mitigation block, and then we are having a retracement back. Let me delete this guy. We're having a retracement back into this range. So this is why price just reacted from that level. You have to view it from the long-term perspective before you see what exactly actually happened. Now price has been coming down for a while, for almost 7 months. Then what we do from here, from the most recent data we have, we pick our Fibonacci tool, pick it, and then put it here and measure this range, and look at where price is currently. Now, if you have watched my video on PD-ARRAY, that is premium and discount array, or basically premium and discount, you're going to learn that the middle of this Fibonacci tool, and then I have a video that will help you to set your Fibonacci tool just like mine. I will link it in the description of this video. Now look at this. The middle of this particular Fibonacci tool is what we call equilibrium level. Above this equilibrium, anything from here above is what we call premium. Below it, we call it discount. So basically what we do in the market is to sell from premium and buy from discount. So that is why we measure to know exactly where price is. We can't be buying from premium. We only want to buy when price reaches discount. And then what we see price did, it reaches discount and found this fair value gap from the monthly time frame. Okay, from the monthly time frame, price actually came into this particular fair value gap that I just marked. This particular fair value gap, we can see these candles have been coming down, showing us willingness to go down, take out this low, take out this low, take out this low, and then enter this fair value gap, came back right into this place. Can you see this? This is what we call a volume imbalance. Volume imbalance. I'm not here to show you these things. These are terms I've already taught you. So this is volume imbalance. It is basically a price action that involves only the tails or the wicks. Can you see? The bodies are not connected, unlike this one. This one, actually, the bodies are literally connected, but you can see space in between these bodies, and only the wicks were connected. So it is an institutional reference point too. Price can actually go back to it, went back to it to fill it, and then it is coming down right now. We can see what has happened for the past months. into this fair value gap again. So ultimately, I believe price is just trying to reach down to this level. This is a mitigation block again. Can you see a failure swing? This is a bullish mitigation block. So what I'm seeing is that price may eventually reach to this place, okay, before we have another upward move again. So we go down to the lower time frame, that is the weekly time frame, because we are not going to take trade from the monthly, but it's important we know what exactly is happening to that particular currency. So let's go to the weekly time frame and look at what is happening. So the most recent data we have from the weekly time frame is basically what we have right here before us. Price has been coming. Let me delete this guys so we can have a clear chart. Price was coming from this level. We had this movement, but the most recent is basically this area after price actually reached out to this particular fair value gap below this area. Let me show you. Price have reached to this particular fair value gap here. Can you see this fair value gap? And then right below it we have this equal lows where liquidity is basically residing. So this, we have seen price traded into this level, and we are expecting price to basically bounce around that area and then give us a retracement into this range. This is the range we're dealing with. If you pick your Fibonacci tool and put it from here to here, the range here, we expect price to basically come back to a premium and look for an institutional reference point in the premium, and then decides to give us an entry downward. So this is what I'm looking at, this particular fair value gap, price coming into this particular fair value gap in the next few weeks to come. As price is getting a lot of difficulty here, we are seeing a rejection block around this area. So I'm expecting price to basically come to that particular fair value gap as we see this fair value gap right here, because what we are seeing right here is basically a grab of liquidity outside this place. Can you see this small push outside? A grab of liquidity right there. Liquidity was grabbed outside this range. So this is exactly what I'm seeing. But last week we closed this candle as a bearish candle, so anything can happen. Price can decide to push down, because ultimately from the monthly time frame we know that price is trying to reach out to that particular mitigation block I marked around here. But looking at it from the weekly time frame, we don't expect price to just reach there within the shortest time, so we're going to be very careful with that. So from here we know price is just here. If price opens and then we decide to move up and pick liquidity, and I can see price have actually grabbed liquidity just above this particular last 2 weeks candle, grab liquidity above there, and then it is coming down right into this particular place. We don't know what will happen. Price can decide to push down even to this particular order block, that has a fair value gap. Can you see a fair value gap right close to the order block? It is also a very important POI, okay, point of interest. So price can decide to just reach here before coming back to this fair value gap, or it can just decide to move here because it has grabbed liquidity below this low and then below this low. So what I'm seeing is basically that. Now dropping down to the daily time frame, let's see what is happening in the daily time frame and then know exactly what to expect for the week. So this is what is happening from the daily time frame. It's important because this is the time frame that concerns you a lot. You can see liquidity has been grabbed below this old low. Look at this. Liquidity was grabbed right there. We have not seen any low formed. We only have these relative equal lows formed around this area. And then the most recent lower high was this level. So all we are waiting for, if we are going back into that fair value gap I marked from the weekly, we want to see that price take out this high, this particular high. This high must be taken out completely and have a retracement before it reaches there and then finally crash down. So for the meantime, we are having a consolidation. We are bearish on the dollar for the meantime until we see this level has been taken out. We are bearish on the dollar for the meantime, guys. The dollar is bearish, don't forget, for the meantime. You can even go down to the 4-hour time frame and look at what exactly is happening, so you can have an itch. The 4-hour time frame is still bearish, guys. It's still bearish. So if price is retracing back, look at this, price have just retraced back to this level. Let's measure the recent range that we have right here. Price just pushed into this premium level. We have a breaker block right here. Price can decide to reach there or even reach for this volume imbalance right here. So as we are looking at this, price may decide to come to this area as the week opens and then crash down again, because we are bearish on the dollar ultimately. Okay, so let's go to GBPUSD maybe, or any of the pairs you are interested in that is correlated with USD. So you can do your analysis on normal foreign currencies. I love GBPUSD because that's the pair I basically trade every week. I'm going to be very brief. I will use the daily time frame through 4-hour time frame. Look at what is happening on the daily time frame. We are basically bullish on GBPUSD because the dollar is bearish. They have an inverse correlation. If the dollar is bullish, then GBP is going to be bearish. If GBP is bullish, then dollar is going to be bearish. So that is the correlation between these two. So you have to understand this. Since the dollar is bearish, it means GBP is going to be bullish. And what are we seeing recently? From the daily time frame, we have broken structure here. We have broken structure. So as the week opens, you should know that we have broken structure right there. Where do you think price is going to come back to? We have taken external range liquidity. Price may eventually come back to this level. You can do this on any pair, guys. I don't have to do it for you. You can do it by yourself. It's basically easy. This is it. So this is a fair value gap, and then we have an order block close to it, and the most valid order block is basically an order block that has a fair value gap. We don't know where price is going to reach before it starts coming down into this level, but we know that price is probably going to come here and then reach out for this level. So for now, we are bullish. We can even go down to the 4-hour time frame and look at what is happening from the 4-hour time frame, just to have a better perspective of what is really happening. So we're looking at this. So this is an order block in the 4-hour time frame. Can you see? We can still reframe our entry from this place. An order block that has this particular fair value gap. Let me delete these guys. I don't want to use those guys. From the 4-hour time frame, as we have broken structure above that level, price may eventually come back to this area. This area. Why? Because I'm seeing a possible inducement being created. This we can see equal lows, diagonal liquidity, this low right here. Okay, so price may reach down to this area before pushing up again. As we are watching it, let's carefully watch it out, or it can even just decide to react from this particular order block. But what I'm seeing right here is a possible inducement right here, and then price may ultimately reach down to this place and take it up from that place. So from the 4-hour time frame, I'm looking at this, and then I'm bullish on GBPUSD for the week. I just want to see the week opens, and then I carefully watch it in the lower time frame to see what exactly is going to happen. Now in the 1-hour time frame, you're going to look at this, and then you can see an order block. So as you keep going down, you're going to get your entry from the lower time frame to rephrase it to your own kind of trading. Now right here, you can see this is an order block, a bullish order block, and then close to it we have a fair value gap right here. So all the same, price can decide to come back here because we have broken structure, taking external range liquidity. We're going to come back to an internal range liquidity. Price may decide to come down here, and then we're going to have a bullish move from there, or it can come down from the 4-hour time frame. Whichever way you're going to look at it, just do your analysis carefully and watch over the market. You are not going to trade every day, guys. I have a saying right here that trading is not all about entry. It's more of waiting and less of trading. Real trading is all about that. It's more of waiting and less of trading. That is how real trading is. I hope this is helpful enough. Make sure you subscribe to my YouTube channel if you have not yet subscribed, to get this every Sunday, to be able to know your directional bias for the week. Thank you very much for watching. See you in my next video.